Okay, I also wanted to answer some questions that I've been emailed about which version of John Eller's code for the Hilbert sine wave you should be using to trade. The original version of the code was published in a book called Rocket Science for Traders, and I've put that code on this indicator here. And particularly if you pull up an intraday chart on an FX, like this is the euro versus the US dollar, you can see there are some real problems with the cyclical turns here that happen there. You've similarly got problems here, and you've got these funny little glitches happening along the turns around here. Now I've tried to improve upon the code, and you can see that this kind of the beta sine wave code gets rid of all of those funny little glitches that happen, and they don't exist here or here either. So I do believe that the version I've been able to create is a better version than that original code. There was, subsequent to the Rocket Science for Traders book, there was another version of the code that was published, and that version, I'll add here, was in a book called Cybernetic Analysis for Stocks and Futures, again by John Ehlers, and he changed the method of calculation quite a lot. And again, using an intraday FX chart, you can see there are still some problems with these funny glitches that happen in these turns here, and not all the cyclical information seems to come out in that version of the code. So you can see here that there was a clear cyclical turn that happened in price, but it seemed to be ignored by that second version of the code. So I've chosen to ignore that later version of the code and stick with the original and try and improve upon that. Now if I turn off that piece of code and show you the final piece of code, I actually have two different versions of the beta sine wave. The only difference is the smoothing of the input data. On the beta sine wave code, the input data is smoothed with a 4-period weighted average, moving average. Very straightforward. If you happen to own the Euric moving average, you can use that to smooth the input data. My personal preference is to use the Euric moving average to smooth the data, but as you can see, the difference in the sine wave, Hilbert sine wave, between the two different versions is almost indistinguishable. Occasionally you get a better entry using the Euric moving average for the input data, but it really is not necessary. But if you happen to have the Euric moving average and have bought that, then I do have a version of the code that uses that for input data. Okay, last part of the video. I just wanted to show you how easy it is to input any of these indicators onto a chart. Going back to an intraday chart, a 699 tick chart on the E-mini, and once you've imported the beta sine wave, just pulling that into a chart, you just select it, say prompt for format, and you can see the inputs here where you can change the different colors. So the slow and the fast lines, I have them as cyan and red, and the zero color is a line that's white. Those are my preferences. You can change any of those, and that will input the beta sine wave there. And then inputting the different support resistance levels, and that's just called the beta sine support resistance. Again, there are some input variables. You can change the support colors, resistance color, red and white, and then the text is added or not. So the text is colored red and white that follows those support resistant colors. If you don't like the complete text saying an end on those the end of those trend moves, you can just turn that off. So there we go, and the code computes very quickly, and again, as I said, can be used in any market, any time frame.